Well, welcome everybody to another Pepperstone Tactical Tuesday, where we talk about everything that's important for the week ahead in markets. And boy, oh boy, do we have another one of those volatile weeks. Something called Jackson Hole, which many of you are probably familiar with, is happening at the end of this week. And it often does bring with it a little bit of volatility and, more importantly, setups in the markets. So today we'll talk about abundance. We'll talk about what's going on in front of the charts. And of course, we'll go through some of your favorite pairs. As always, if you have questions throughout, please put them in the comments down below if you're watching live. And if you're watching in a recording, remember to subscribe to the Pepperstone channel and hit the bell so you can get access to this. We do this every 2 weeks and it's awesome to be here. My name's Thomas Atkinson, and as always, I'm joined by Tyrone Abella. Tyrone, how have you been going this week? And we've seen some pretty nice moves, haven't we, in the cryptoverse and some other pairs.
Yeah, absolutely. Look, the indices they're all-time highs for the most part, and look, there's certainly a lot of anticipation going on at the moment. But some of the currencies are moving quite well, so looking forward to getting in and talking about all things profit.
Absolutely. So let's now talk about. We'll start off with things here on the cryptoverse, I guess, and we'll go with Bitcoin to start off with, just because it's been so popular in the markets recently. And there are a few things that I lined up here, Ty, before getting started today. And one of those was, of course, this little trend line that probably I haven't seen too often being put into the charts. And this comes off the lows that we saw back in April. And obviously then we saw them again back in the back of June. And then now we've seen them tapped again. And we've got up here one of our favorite indicators, and this is the volume profile. And of course, when you're looking at volume profile, guys, you're usually looking for a ledge or at least the most traded zone. So there are two levels to watch. One of them is right where we are right now, which clearly was pretty heavily institutional buy or sell zone. So obviously a lot of transactions going through there. And of course, then we've got the 104,000 level as well. So if the market does break underneath this trend line, Tie, what would that do? We've got kind of a high, we've got a low, we've got a higher high. If we got a lower low underneath about 116, could that force the 104, do you think?
It could do, and it's starting to look notoriously like a Wyckoff at that point too, really. So I think that, that is a potential. And really, if it breaks that line, I think I'd be starting to be concerned, especially if it gets past 112. I think that if it breaks past there, there's not a lot between it and 104, to be honest. Look, the drums are ringing for it, I think. It's going to be one to watch. Look, it may bounce from here, right? I mean, and if it does bounce here and test a new high, then realistically, there's probably nothing stopping it going up another 10,000. But right now, I would be very, very cautious around this level, because I think it's an area of great interest.
One of the reasons why as well is when you go up to the higher time frame. So some of the things that we talk about here on Tactical Tuesdays is obviously we go through the idea that it's important to look at all the time frames. Multi-time frame analysis is so important. We get that shooting star sitting on the weekly, unable to get past 120. So as Tyrone mentioned, if we get a close above 120 this week, I think the chances of further momentum rally is good. Couple of little fun facts. December tends to be, well, at least if we're looking at other halving periods, which are basically periods where you get halving on Bitcoin, and then of course you get this cycle effect. Often they've topped off in Decembers, at least based on the history. Of course, it's just data. And also another thing is that when we've seen those types of cycles around this point, around 3 months into near the end of the year, we often do get a bit of volatility. So a couple of very interesting things happening here in the crypto markets. From crypto, though, Ty, because Bitcoin obviously is the barometer of all of that, we've also got some stuff going on in the stock market, potential rotation. And this has a lot of implications, doesn't it, to the different indices. This is the top 10 stocks that have taken us all the way up pretty much. I think it's about 75 to 80% of all of the gains have happened actually from these 10 stocks. And what they are is we've got the Magnificent 7, which we're all familiar with, PLTR, Oracle, AVGO. And this has actually now maintained a very nice channel on the way up. So the importance of holding here, Ty, is so important to everyone, isn't it? Because, of course, we've got the daily 20 moving average, plus we've got, I would argue, a pretty beautiful channel on the way up.
From a technical standpoint, that's one of the prettiest channels that you'll ever see. And with a 20 moving average effectively running parallel with the bottom of that ascending channel, I don't think I've ever seen a more clean technical actually in terms of that particular pattern. And I think that probably highlights exactly what you said, that it would want to hold here, because I think when the first time that channel breaks, I think it's probably going to be the catalyst for the pullback on a lot of the indices. Like you say, this is what's got us there in the first place, and by golly, it might be the thing that brings us down. So it doesn't mean Armageddon either, by the way, but it means a pullback, right? Like, and that's probably, I think most analysts would welcome a pullback on the markets right now to give it some stability, because 2 steps forward, 1 step back is always a healthier long-term trend. So I think this is I think people should probably mark this down as a chart of great interest and probably keep an eye on it, because I think you're right about it being a barometer, and I think a break of that 20 moving average and the bottom of that channel could see a significant move on a few of the key indices.
And you've got to remember as well, if we do have a movement into other stocks, then because tech is such a huge part in those top 10, I call it the top 10. Maybe it's Tom's top 10. But anyway, basically it's a major concentration or saturation in stocks. So what this is doing is it means that if we get rotation, we could also see what I call a pit or a pullback in time, which is, of course, sideways action. Because if you rotate out of the biggest tech stocks, very difficult if they're the big ones for the markets to go forward. So it's not just that, Ty. We go to the US 500 here. We just quickly go out into Jackson Hole. So often this does hit around markets. So obviously the US stock market being so important to everything out there. Well, we've hit this kind of top trend line just recently. And then we can see here that we've also got kind of like multitudes of highs. So we've had a high back in 2021, which led into a bit of a sell. We've had a high here in 2025, which obviously led into Liberation Day and a bit of a sell. And then we've come back and we're just above this level right now. Now, I think it's important to note that if you go to monthly, if you go to the weekly and you go to the daily, I think you're hard pressed to say that this is any type of downtrend. You would have to say this is still bullish on the charts. And there are levels that may change that, but I think where people have been having a real problem is that we're climbing a wall of worry. So do you see any signs here? I mean, we're going to have divergences, aren't we? But are they enough?
Yeah, probably not, because I think the divergence is natural up here. At this level, there's going to be less volume, there's going to be less movement, and you've got to remember, a lot of people need to remember that when you're looking at divergence as a rule, when a market starts to flatline at the top, it naturally gets divergence and things like, say, the MACD, because the moving averages are generally coming together, mainly because the market's going sideways. It doesn't really mean that there's a big negativity. It's just that naturally, the natural process of things, when moving averages start to flatline a little bit, is that you're going to get divergence. And if you get low volume, and quite often you've got to remember, when the market does poke up to an all-time high, even if it is just a little all-time high, a lot of the time it's done actually on very small volume. So you're going to see divergences naturally occur here. So I think you need more than that to answer your question. I don't think divergences will be enough, because they're almost artificial in what they're displaying. I think I would want to see a proper momentum shift. I think now more than ever, you want to see that series of lower highs and lower lows on price. I think you need the lightning bolt really to confirm what we're trying to achieve here, because that's a momentum shift. And really what we're needing to see is a momentum shift if these are going to start moving down, really.
Yeah. And something like this would be what you're looking for. So it seems to me that maybe we're losing a little bit of steam in some of the big tech. They have started, some of them have shown volatility. One of the things I say about the end of trends is often it come with extreme volatility. So if you're going up and it's like little gains every day, it's like a melt up, a very slow, methodical, dull market. That's pretty bullish. But when it starts to move very quickly, that's when you start to say, okay, well, wait, hold the brakes a little bit here. Maybe I need to reassess which is the best area to be in. I think everyone's pretty aware that tech's been doing well. So now maybe it's time for some others to shine. Certainly some opportunities there. From US 500, Ty, we can go into a couple of currencies. Now, of course, the US dollar has been the most crowded trade pretty much the last month and a half. So everyone's trying to short it. And before actually we look at the pound, we'll just go to the dollar. But the US dollar, you can see here, everybody's been trying to short this for a while now. And particularly it came down to these levels here. And we've talked about this on our shows with Pepperstone moving for a long time. Obviously, we always talk about the dollar. But one of the things here is that if we are to go through this level, that's going to be a big deal. It's going to be difficult, isn't it? Because even though it looks a little bit negative on the weekly and the monthly, there are some signs of stabilization here. Did you have any particular areas that you liked in the dollar at the moment? My personal opinion is it hasn't broken through this 90, I think it is. We have to get above here, 98.90, before it really starts to look like bulls are back in control for a small move up.
Yeah, I agree. And I think it's trying to, right now, it's trying to do an inverse head and shoulders on the 4 hour, as we can see. It's still a little bit of work to do before it gets there. I think it's trying really, really hard. There's a few different plays here. And I think it is trying really hard to break on up. And I think for mine, it's got to get into the probably 99.50 really to convince me that it's actually going to turn around. If it does, I think there's a great deal of upside. And I think that I mean, look, 101.80 to 102 is a level that we've been talking about for a while, and then and even as high as 104 once it breaks through that level. That's the sort of magnitude of move we're talking about. But it's got a lot of work to do still. It's tried a few times to break out of this 97 and 98 zone. It's very comfortable here. There's no question about that, and it wouldn't want to be going lower. I tell you, if it breaks at 96, I think we're in all sorts of trouble. But I think it's holding pretty steady. But to me, I'd like to see a break into the 99.50, really, a break above 99.50, and I think that there's enough momentum from the bottom shift to get it up into sort of that 101, 101.80 area. That's what I'm looking for.
Yeah, a couple of things on the small time frame that I like. We'll look at the euro in a moment. You can see here we've got this little small trend down that seems to be holding. So we've got supply, dumps down, comes up, tests it, sells off again, comes up, tests the previous one, sells off again. Hasn't made a lower low yet. So what it's doing is it's kind of saying, well, I'm going to possibly pressure this trend line to the downside on the small time frame. So you're going to see this on anything under 4 hour, really, guys. And then if you get through, let's say this major one here, plus ties levels up here, then that's really going to help solidify the potential moves to these next levels and the inverse head and shoulders. One of the things I think that a lot of people don't appreciate, maybe it's a good segue here into our gold trade, is this exact same thing happened to gold. So it actually happened, the same kinds of concentration happened on gold back in April. And if you've looked at a chart of gold recently, let's put a weekly on here, you may notice that it hasn't done anything. And that's perfectly normal. When something gets super traded and everybody's aware of it, again, the dollar was the most shorted concentrated pair, then often you go into this, which is more of a sideways market. There might be time to whip out the systems of short and sharp tie when it comes to moving on the dollar or any of these things. Speaking of gold, though, it might be due. I mean, that is one serious coil. I mean, this thing has been sitting for a long time. You guys know, if you've been watching our shows here at Pepper, we've been bullish gold for, well, years. But at the same time, that's the macro level. On the trading level, you can kind of see here, I can make a case for a bit of a beauty. I don't know. I like that, Ty. What do you think about this this potential coil break that could happen here? Either way.
I do like it. Yeah, look, it's it's basically a symmetrical triangle. Or you could call it, it's not really a wedge. It's getting close to the apex though. And it could break either way. Look, I think there's a very strong case actually for either way. Don't forget, this is not an indice, people. This is a commodity that could go to 4,000 by the end of the month. It doesn't have to be capped at the top. So yeah, it's a little bit different when you're talking about the S&P 500 saying, could it go to 7,000? Well, it could, but a lot of things and a lot of mechanics need to happen for that to work. Gold, actually, a weakening market could send it, sending up to 38, 3,900 easily. So it could break up or down, just like a symmetrical triangle would tell you, without any real bias. And I think you can make very strong cases for both sides, to be honest. So really, I like it. I do like what it's doing. I don't mind that it's coiling like this. I think it was probably overdue, Tom. It had such a big run. It made magnificent moves on the way up. It probably was overdue for a really good consolidation. But I think what's important for it, though, is that it hasn't sold off. It's not like it panic sold or it returned to a really low level, sort of 27, 28, which is what a lot of people thought it would. It's actually held true right up here. So I think that's very important for it. But that said, I'd be happy either way, really. I think there's a case for both.
always a case for usually both, but in this case more because it's coiled and it's sitting in symmetrical, as you said. I actually just took for the audience there 2/3 of the way through and extrapolated it from the potential break area here. And what you'll find is it proofs pretty well to 3. Generally makes, and why that's important is because you've got 2 major supports on the way down. So I'm not saying it's going down. Of course, I'm more bullish than bearish, my own personal opinions. But the main thing here is that what that means is it's kind of a very correct style pattern, isn't it, Ty? When we say when it proofs, that usually means that there's something more behind it, and it could be a really interesting setup. So I think that's going to be interesting. I put some higher highs and higher lows there for people to look at as well in terms of where you'd see the breaks on the charts just then. Let's move over to silver just before we go back to the pound and the euro and some of these currencies. And you can see here, Ty, with silver, it's broken a little high. It's come back down. It's found buyers again. It hasn't obviously made a higher high. You can definitely make a strong argument weekly, monthly, even daily, but daily is kind of like a bit questionable because it made this lower low. So I'd say weekly, monthly, certainly bullish. Daily, it's neutral, maybe a little bit bearish. But this is super, super important level. So similar to gold, silver's trying to push up. It's been doing better than gold since we've been actually discussing it in the last 3 months, particularly. But yeah, not too much action just here. It may need that gold catalyst break. And if that happens, I think silver will also come with it.
I agree. I think that it's probably, even though it is a little bit stronger than gold recently, I think if gold does move to the upside, I think you might see a real bounce in this one and actually push up, at the very least, probably to those all-time highs, or not all-time highs, but the recent highs. But I think gold needs to lead the way. I'm not so sure silver can do it on its own. I think we need to see that coil break and triangle break on gold. And all of a sudden, really 39 to 39.50 is very, very achievable on silver. Yeah, I think it needs that guidance. I'm just not sure it's going to be strong enough by itself, even though there's absolutely no reason to try and short this right now. Like I don't see a technical anywhere on any time frame that would even get me thinking about shorting it at the moment.
Yeah, so another one there. All right, let's jump on over to the pound US dollar for a second here. I had that up just before because what I noticed with the pound was, of course, if you go to the higher time frames, you're going to see it's doing the same thing that you'd expect, which is pound stronger than the dollar because, of course, the dollar's been weak recently. It has rallied, though, and what I noticed when I go into the weekly and the daily is you'll see it's at a really important point, and I guess this is coinciding quite well with that US dollar. You've got your very strong supports, and you seem to have your very strong resistance or supply zones. So I feel like at the pound tie, if it does break above this 136, maybe it needs to get through here as well. That could actually be, could it do this? If that happens, so it comes down and kind of creates a left shoulder, head, right shoulder in the direction of trend, then maybe actually there'll be a fair trade here on the pound. At the moment, at resistance, I don't think there's anything too much here. I could see why people would try to short it here. But yeah, do you have a strong trend here on the pound at the moment?
I think that it makes a lot of sense to if it came back and tested that shoulder at around the sort of 134 level. I think if you put your crosshair on it as well, I think you'll find that it's got actually a really good roll reversal zone there as well. It's got previous support and previous resistance, even though it's not just the shoulder. Even if you go back a little bit further, there's another ledge there, and there's also another resistance point just prior to that. So 134 is a very strong level for it. Now, I would really like to see it get to 134 because I think it's a very interesting move from that point. If we can get around that level there, and it does kick off from there on the smaller time frames, that could be one almighty inverse head and shoulders.
Yeah, and this is just proving huge trades up here. So obviously you can see why the sellers could be here. Scalpers maybe in this one trying to get it down. Issues probably around 134 because that's obviously very heavily traded. And then it seems like a lot of targeting and buying potentially also going about 133. There's basically 3 levels on the pound. And that's kind of cool because, again, if you're somebody that trades within a range or you're saying, you know what, I think the dollar is very, up, down, all around as it consolidates, then you've kind of got these 3 clear block levels to be looking at. So some good stuff there as well. And I think this is coming in through most of the currencies. Like whether you look here or you're looking at the euro and these kind of combos, you can kind of see here, again, it's slowed in its trend. So if you go to the weekly, we're back We're back at these levels. We've followed the euro all year. We've obviously been very bullish on the euro, and it's just kind of started to hit into where I would say there are problem zones. And again, if you haven't started to do this and you watch Pepperstone shows and you watch this on YouTube and stuff, guys, don't make the mistakes that so many people do. Higher time frames first. You don't have to check them that often because guess what? Monthlies and weeklies don't change very often, do they? But they tell you so much. Remember, institutions and biggest traders in the world, they make decisions on bigger time frames. It just makes sense. Algorithms and AI or whatever we want to call it now, they make decisions on smaller time frames and create beautiful structure. But if you didn't see this on the euro and you didn't know that that was there, and then you're like, and you're scalping a 5-minute chart, and you're thinking, oh yes, I think it's going to 1-2. Well, it's probably not because it's going to have problems here. So I think with the euro, there's a clear kind of level of buyers, which sits around that weekly 20, and there's clearly a lot of consolidation. So again, I think it's probably short and sharp is the game in currencies at this stage till we see central bank action.
Yeah, I think I agree. And look, you've got to remember that the euro is significantly impacted more than most dollar-based pairs with the dollar index. So for this to go to 120 or 122, that's going to require the dollar index to have a low probably below 96, and we saw how strong that level was. So you've got to bear that in mind as well. So really, I would be keeping the trades relatively tight on the euro at the moment. And it's not to say you can't trade it. I think there's some really good trades on it, but I wouldn't be looking for 400 or 500 pip moves right now. I think it's more just keeping them short and sharp and just really playing the scalping game. Because I think there's good scalps. I think you saw the areas there. We've got good support and good resistance. At very key levels, you got your 118, you got your even 114 is a good level, 115. They're all really good scalping zones. But I think playing inside that playground is probably the best play on the euro at the moment until the dollar index really gets a clear direction. Because let's face it, a dollar index, traveling at 101 or 101.80 and the like is going to see this euro back at probably 112, 113.
Yeah. Well, let's jump on over to oil, which is contentious because it's kind of been, I would say, a tough trade. And I think we've said this all year. It's a political trade. It has all sorts of very strong levers going on right now in the world of 2025. So I find this very tough. I know some people will say, oh, well, technically it's done this, it's done that. I don't know about your opinion exactly here, Ty. I personally go with the kind of thing that is currently in a bit of a downtrend here, smaller time frames, looking at around this 60 kind of support, 60-80 area, but I don't really have strong conviction. I know a lot of people want oil to be covered, so I bring it up, but do you have a strong one on this? Otherwise, we'll move on.
Yeah, look, 62 and 62.50 is proving to be a bit of a battleground for it, but a break lower, and I think 60 is on the agenda there. I think you're right. There is technicals here, but I think there's bigger motions at play than just technicals. So I think it's a trade that you want to be quite careful with. I think the 62.50 will probably hold. It looks like it's trying. Well, the last week or so has been holding at this level. It's fighting for dear life. And the next real move is 67. I mean, if you're looking for long opportunities, I probably would be looking up to maybe a 67 as the first target. But a breakdown below 62, and I think $60 is almost the support level I'd be going for.
Yeah, so 62, maybe to 60, above 64, 50-ish, maybe 67, kind of the two levels that we're looking at. In terms of best charts of the week, I think the best charts of the last week have been China market, actually. The Shanghai Composite, so if you haven't seen this, we'll put a million zeros in and then one, that's the one. You can see here it actually made a multi-year high, which I think is very, very telling. So this is off the back of quite a lot of liquidity coming into the system. And you can see it's been an epic rally in recent weeks. We often cover HSI on the show, which is, of course, the Hang Seng, and that's been doing okay as well. Some spots to watch, daily 50. That's been one. We did make a new high recently. So usually the kind of rule of thumb with moving averages is that if it makes a higher high and then it comes back and tests the moving average, that's okay. Obviously not guaranteed, but okay. But if it makes a lower high and then comes back and tests the moving average, That's a bit scary, isn't it, Ty? We don't want that one. So it hasn't done that this time. But yeah, still
looking out,
bullish.
he's definitely start paying attention at that point. You're starting to alert you that there could be a potential weakness. I mean, we talk about that a lot. Understanding when the potential weakness could be there is very, very important when placing trades, because you need to be aware that there is a problem. And even though it's been really strong up until that point, nothing lasts forever. And what you really want to identify is the opportunity to actually avoid that last trade that will actually cost you out on the way down. And that's the first sign of that is clearly a lower high and testing the moving average again. So it doesn't mean it's going to absolutely sell off. It doesn't mean that you panic, but it means that you start paying a lot more attention.
Yeah, and also the thing is, you're a trader or an investor. You don't have to make a decision just because you don't have to always do something. So remember that abundance mindset really helps a lot to realize there's always another trade. And it's like the news, I always say, do you remember it 2 weeks later? If you don't, then that's probably a telling sign about how much it didn't really matter in the first place. Sure. Let's go over to the other one, which is, of course, the classic, the old US 2K. So we've had this line here for a while, which is the 2280 area. And the market broke through, didn't really convincingly break above 2320, which is clearly the resistance over here as well. And it's come back a little. It's come back to some anchored VWAPs. I did expect this to buy here, which it has so far as a scalp. We've covered this on the show a little bit here doing these Tactical Tuesdays. Again, sub if you want to find out more about this type of stuff. But it really needs a new high. And I think if it does get a new high, maybe this is the real deal. And we're moving towards that first major target technically, which is 2440. The Russell, well known, Ty, to be a bit nasty, isn't it? So it's at support. It's finding buyers. Is it enough?
It needs to get past 2320 for mine. It needs to get past that high. If it does that, I think it's off and running probably to the all-time at 2440. But it needs to get past that previous high that it's set there. I love the Russell. I think it's a great trading indice. I think that it gives you really good opportunities. It's very, very technical. It's sitting right at a roll reversal zone now. If it goes from here, no one's going to be surprised. It's got a very good base here, no question. But if it fails at this point here, it's probably going to go running to our favorite zone, or my favorite zone, which is the 2180. The 2180 is my favorite. Between 2180 and 2200 is my favorite zone. And if those moving averages break, I think, those arrows are like a racing car racing along that boundary where I think it might get to. I love it, actually. I love that boundary. It's my favorite zone on the Russell.
All right, cool. So we've got 2180. We've got the potential of even a Russell bounce here, but we want to see 2320 plus closure would be ideal. And of course, it does look like that rotation was playing out, that kind of top 10 stock sector obviously coming back into play. So guys, as always, if you have questions for Tactical Tuesday, put it in the comments down below. Some of the things we'd like to cover in the future are the pairs that you're looking at and trading, particularly a few more currencies as we see things heat up, probably post Jackson Hole. Do remember this week, Wednesday is a very important meeting minutes from the Fed. And then, of course, we've got Thursday, Friday, and we've got Jerome Powell talking on Friday as well. So a couple of major events coming. Always volatility in these markets, always opportunity. We are now in the 3 months that tend to bring the biggest amount of vol of the year, though. So the VIX does tend to spike around this period. And that can be a great opportunity for traders and investors and position bases and everybody out there. So we look forward to seeing you in a few weeks. And obviously, if you're interested, you can watch. I think it's next week, Ty. I've got a macro show coming out for everybody so they can check out some of the things I'm looking at on the macro side. So from all of us here at Pepperstone, we'd like to say thank you so much for spending your time here to check us out on Tuesday. We look forward to seeing you in just a few weeks' time, and I'll see you next week for the macro. And Ty, any parting words for everyone to kind of get stuck into markets?
Probably the biggest advice I can give you is actually make sure that you subscribe and actually check out that video, the Tuesday macro video that Tom puts out, which is going to be a regular feature alternating with these webinars are very, very insightful, and it actually really sets you up for the week and understanding things that you may not necessarily trade off, but things that you need to potentially look out for when you are trading. I think those tips are very, very important. So be sure to look out for that and subscribe so you actually get the alerts that you need. So yeah, really, really good stuff coming with what we're doing with Pepperstone at the moment. So thank you for joining us today. We'll be live again in 2 weeks' time. And yeah, just look out for that macro video next week.
And we've got one question is coming to end here. Will retail sales move the markets tomorrow? It depends if they're an outlandish number. So if it obviously is within line, they'll move it for a little while and then it'll stop off. But if it's some kind of astronomical number similar to PPI last week, that could be a bit of a catalyst. Always an important one, not necessarily something we remember 2 weeks later, though, is what I always say, John. So thank you for your question. All right, guys. Thank you so much. From everyone here at Pepperstone, we appreciate you, and we'll see you next time. Bye for now.
Thanks, everyone.